Time now for Futures in Focus. The dollar continues to consolidate as traders assess the latest Trump controversy and another round of perhaps spotty economic data. Joining us from the CME to discuss is Bill Baruch, Chief Market Strategist at iiTrader. Bill, thanks for joining. Did that bounce in oil prices shake out any of the shorts that might have been around?
Well, a lot of people jumped on the bear case last week and before. And yeah, this is shaking out the shorts that were late to the party. You know, their option expiration is tomorrow for the June contract, and there is a tremendous amount of open interest right at the $50 strike for calls and puts. And this could be sort of a magnet. Now, think about all the puts that were in the money a week and a half ago. Now, all those are nearly worthless or about a dollar in the money at the moment. So they're giving back a ton of money. And then there's a lot of open interest on the call side that needs to go worthless too. So I think this market's going to stay between 49 and 50 as we head into the OPEC meeting. As well, the June contract falls off the board on Monday, and I expect that topping in a buy the rumor, sell the fact next week, that we can resume this downtrend. The U.S. production continues to pick up, and that's going to be the story that really is going to drive this market lower.
As we get more and more research ahead of that OPEC meeting that suggests that indeed the production cuts will continue and that Saudi will be quite happy to have those cuts continue, does the price drop?
You know, ultimately, right here, right now, we don't want to see this price fail ahead of this OPEC meeting. You know, they're extending the cuts 9 months, and I actually think this could be a little bit bearish in the long term because they're locking in this for 9 more months and not deepening the cuts at all. Now, if the market started selling off ahead of the OPEC meeting, then they could deepen the cuts. But I think only extending these cuts, and especially extending them further than 6 months, looks to lock this in theory, and really where the U.S. is picking up production. And if they only cut 1.2 million barrels per day, then the U.S. can really overtake that production cut by OPEC, but towards the end of the year, towards August, really.
Yes. Bill, I want to switch to the euro for a second. What's the sentiment down at the CME? We saw the euro top 110 and stay there post, obviously, the Trump happenings and also this idea that maybe Britain is headed for a harder exit.
You know, ultimately right here, the euro is recovering with the French election in the rearview mirror. On top of that, the Eurozone has had good data. On the other side, the U.S. data is far from robust. I mean, we've seen retail sales and CPI on Friday that got the ball rolling on the dollar selling off below 99, which is the 200-day moving average. Yeah, some criticism around the White House has put some pressure on the dollar, but ultimately, I think this is a story that really is a relief from the French election, but as well as poor data in the U.S. On top of that, the U.S., the Fed priced in about 100% of a Fed hike 2 weeks ago. We're down near 70% now. So that relief is starting to price in with where the dollar index is trading. Now, there's a lot of support of the dollar index at 97.84. And I am a long-term bear on the dollar, but I am not selling down here. I am looking for a recovery in the dollar index as we get closer to the June Fed meeting, and then that's going to be a really good sell opportunity at that point.
Bill Baruch, Chief Market Strategist at iiTrader, with today's Futures in Focus.